Fast. So fast.
Is that the Texas way to say it? I have introduced myself, I think, to everybody, but I would love to go around and hear the company that you are building, growing, starting, working at, whatever works for you.
Tim and I work on a company called Ungrocery, and it's an online food marketplace that sells food directly from producer to consumer, and kind of has a hyper-local focus to it.
All right. Good to meet you guys.
Great to meet you.
What about yourself?
Evan Alter, I'm Big Wheelbarrow. We help distributors deal with lots of small farms.
You guys should know. Yeah.
We do.
Okay, well, we're done then. The meeting's over. One connection. There you go.
Hi, my name is Alex. I'm from Web to Ship. I'm helping online sellers to ship items through a comparison website for courier and postal service.
Well, I figured that's why you're here for me, huh?
Yeah.
Yeah.
NK Wadawa, I'm with Open Media. It's a government transparency software.
Okay, good to meet you.
I'm Janet Zides. The company is Lay Labs. It uses GPS, VHF, and Bluetooth to help hunters. At this point, this first iteration is helping hunters track their dogs. It has a range up to 17 miles at this point.
Okay.
Wow. Satellite images. So it's the Internet of Things.
Okay.
Hi, my name is Stacey. We're Pay Your Tuition, PYT.
Okay.
And we help students get access to funding to help them complete their degree, so the last amount of money to graduate, like the last mile loan. But we work with the banks to de-risk and make better decisions for those students.
All right, good for you. But it was easy to pick the company song, huh?
Yes, it was.
Or you were named after the song, one of the two. But
Hi, my company is called the Mentor Method. So we use mentorship to increase workplace inclusion. So unlike recruiting firms or job boards, we go beyond putting a diverse butt in the seat and help companies think about how they're retaining their talent.
all right, good to meet you.
Cool. My name is Matthew. The company is Re3D, and we focus on additive manufacturing, 3D printing. So we manufacture the largest affordable industrial 3D printer. We also do 3D printing contract service, sales with services and consulting for large companies, big brands. How do they integrate the technology into their workplace from R&D to the factory floor?
All right, good to meet you.
Hi, my name is Nestor Taveras from BrandSoft. We help local brands from Latin America connect to the market of their diaspora here in the U.S. Through online marketplaces and also business intelligence SaaS.
Okay.
Hi, I'm Suman from Funnel AI. What we do is we look at all the discussions happening on various platforms on the internet and try to analyze the intents and connect businesses to those people that are talking about their products and services real time.
Okay.
And I'm Tony, also with Open Media Government Transparency Stream Video Software.
Okay. All right. Some new folks. What about yourself?
Hello. So I'm Celine and I'm Laura. We work together. So we have a company called Just Spot Me. It's a small tracker, very small, and with a long range tracking and low power, so long lifetime battery.
All right. Good to meet you.
Hey, my name is Samir. We have a company called Pay. We are making a platform for clients to book, schedule, and pay for barbers in the local area.
Okay. All right. Come on in.
There's a seat up here.
I'll get started finally so we get. But who are you? I'm Kevin.
He's Mark.
He has to be the new guy. He has to introduce himself. I don't know. Can I move that? I don't want to touch it.
No, you can't touch it.
I'm Kevin. How are you?
Thank you, Mark.
How are you, Mark?
Good.
Where do you work? What's your company?
It's Vineyard.
Vineyard?
Yes.
All right. That sounds fun. All right. I'm Kevin McKeand. I work at a company called Big Commerce. You may have heard about it. I'm going to tell you a little bit about it. We were actually in the news yesterday because we raised $65 million. This is our last round of funding. Yeah. Last round of funding before we do that IPO thing, which will be the next 12 to 18 months. So I'll tell you a little bit more about it in a minute and what I do. But this isn't about Big Commerce. This is about, in general, some of my experiences in the SaaS world, as well as startup businesses. Just some chairs over here. I think Jane, right? Jane asked me earlier if I'm a mentor. Technically, I'm not. I'm just a friend of Lindsay's.
Do you know anything else?
Lindsay and I worked together at a previous company, and so we've just stayed connected and stayed friends, and so I thought this might be a good chance, or she thought it might be a good chance for me to come speak to you. So I'm going to make this super casual. It's 11 after. I have to the end of the hour. So I'm going to go through a couple of slides. This isn't intended to be an intense training class or anything like that. I'm not going to teach you what SaaS is, Jane, unfortunately. We'll have to go through that later. But I am going to tell you about some of my experiences in the software as a service world. And maybe even give you a little bit of advice from myself, having experienced this along the way. But I want to tell a story more than anything else. I don't want this to be sort of instructive classroom sessions or anything like that. And I want to leave plenty of time for you to ask questions if you have something that you want to talk to me about, or questions you want to ask me, or things you want to talk about with other people. Hi. I'm staying away because you're waiting on me. So let me tell a little bit of a story, and it'll all weave together. When I get to the end, it'll hopefully make sense. But you'll also find out that I'm not an expert in creating slides either. These are not going to be the prettiest things you've ever seen, but they're meant to tell a story. So I like to do that instead, is just leave a little bit of words on there, and then we can talk through what's going on. So Lindsay and I met each other at a company called Tabbed Out. Tabbed Out is a mobile payment solution provider in which you open and pay your tab, bar, restaurant tab on your phone. I was one of the original investors in that company and started working with the team of people, probably as like employee number 5, I think it was. I also invested in a company here in Austin called Gravitant. It's a cloud-based brokerage service. Ultimately, we sold the company to IBM. I'm also an investor in a company here locally called Flash Parks, and I'm going to tell you more about that later. Because it weaves into the whole story about software as a service and how small businesses get started and grow. Not that you need my advice for that, but just want to tell you a story about some experiences that I've had. You may even, I don't even know if in the building that you're in, you may use Flash Parks. They're all over Austin today, but it started off originally called Flash Valet. And then I'm also an investor in a local company here in Austin called Optelos. Optelos is a machine learning and artificial intelligence software company for the enterprise drone space. We have clients around the world for solar array fields, cell site inspection companies, real estate, insurance adjusters, and we work with companies that fly drones over these areas, and the machine learning and artificial intelligence actually takes images that the drone takes, it stitches it all together, and it makes decisions about what it sees. So it can fly up and look at a cell site, for example, and it can tell you if you have a down tilt on an antenna, if there's a cable missing or a bolt is gone, and then it notifies you that you need to climb up and fix it, as opposed to climbing up every single one of them and visually inspecting it. So brand new company, bootstrapped for the most part, really, really small, but just getting started. We're in the process of raising $3 million right now, but we have about $2 million in contracts already. So interesting stuff. So I tell you that because I have a broad array of experience in these different companies, but let me be very clear about something, that I am not an expert in SaaS. I have an investment thesis with these companies, and these are the companies that I've invested in, and the reason I invested in them is for this. Rick, Bob, Ken, Eliseo, Juan, Dave, and Dave. I invested in them. I didn't invest in their company. I invested because I trust them, and because I think they're good business people, and because I think they're going to do something really cool. These two guys right here, for example, started a company called Flash Parks. They are Dominican Republic immigrants. They came over to the U.S. and had an idea, and I'm going to tell you more about this later, about where they are today, but grew it from pretty much nothing to a company today that will do $17 million in revenue this year. We got an offer to buy the company for $50 million about a month ago, and we turned it down. And they're profitable. And that was all based on a $1.75 million raise. So doing really, really well. But these guys are the hardest working, most trustworthy people that I have met. And so that's my investment thesis. And it's proven to be pretty good because I'm not particularly smart about some of this stuff. When you talk about things like Gravitant, cloud-based brokerage services, I told my friends who work there, I have no idea what you're talking about. I don't really understand how it works, but you guys have been successful in the past and I trust you, and it turned out pretty well. We sold the company to IBM, and so financially it was a good deal for all of us. During the day, my job is I work at this company right here, Big Commerce. I also think of it as one of my investments through my stock options. They just happen to pay me to come to work every day. But I don't think about it any differently than I do an investment or a company that I invest in. I think of it as my job every day is to come to work and work with a group of people and create value. Create value for our customers, create value for our shareholders, and to really make it a fun and interesting place to work, because like I tell people that work for me, this is not going to be your last job. This is not your career. This is something that you need to find joy in, and you need to understand what you're learning out of it every day. So treat it that way, and treat it like an investment. Treat it as if you were a shareholder, which you are, and treat it like you might have started it yourself. So this is also one of my investments, hopefully it turns out. We are a e-commerce SaaS-based platform, and we provide a licensed software tool for companies, we call them merchants, to build their own online store. These are some of our customers. We have 60,000 customers around the world in 120 countries. For those of you that just came in, I had mentioned earlier that yesterday was a big day for us. We announced our last round of funding for $64 million. That's our last round of funding before we do an IPO, probably in the next 12 to 18 months. And I'm going to take you through again the stages that we went through as we thought about that, and the things that accompany at our growth stage where we are today, how we think about that. But about 200 million total raise as a company. So back when Lindsay and I were working for this mobile payment solution provider, I decided that it was time for me to go do something else. My background was in telecom and payments, and I just decided one day, you know what, I love doing business development and partner management, but I need to do something different. And so I woke up one morning and found this company called Big Commerce, and I cold called the chief revenue officer and I said, you got to hire me. At the time, I didn't know anything about e-commerce. That was about 4.5 years ago, and today I would say that I know a lot about it. And so this isn't about e-commerce, but I just wanted to tell you the story about how I got to that point, because back then, as there is today, there were all these charts that you can still see that look something like this. This is the growth of e-commerce. Here's 2018, 2.8 billion going to 4.8 billion. And what I realized, of course, is that this is one of the fastest growing markets or segments in the world. And if you think about, for example, even places outside of the US, which we typically like to think of because this is the bubble that we live in emerging countries like India and China, the growth rate is even more phenomenal than this because it's new. And so lots and lots and lots of opportunity, and companies like Big Commerce are trying to figure out how to participate in all of that as well. But I also got intrigued by the fact that Amazon was really part of the driver behind that. When I started working at Big Commerce 4.5 years ago, the founders of the company said it was all about having your own brand name. It was all about you building your own online store and being responsible for growing your business that way. And they tried to convince all these merchants that you sell t-shirts or you sell pencils or you might sell food products or whatever it is you sell, but you need to have your own brand, whether it be Kevin's t-shirts or whatever it might be. And it turns out that that's a flawed approach. It turns out that as a company, back 9 years ago, even up until the last couple of years, we didn't get it right. We didn't get it right because we thought that there were going to be hundreds of thousands of people that wanted to start their own online store, and they wanted to be millionaires. They were all going to get rich someday. But then this happened. And the fact of the matter is that Amazon is the largest e-commerce company in the world. So what we did is we did a little bit of a pivot, and this is going to be a bit of my storyline as I go further along. And that is, a couple years ago, we reassessed the business that we were in, and we decided that what we were really doing is we are a multi-channel selling and fulfillment platform. So what we did is we decided that rather than fighting against Amazon or eBay or Facebook, let's join forces with them. Let's figure out how we can get a big commerce merchant to build an online store and actually sell their products wherever they want to sell them. We don't really care. This isn't about big commerce. This isn't about our online store. This is about helping people build a business, selling their products, and making money. So what we did is we took the core of what we do, which is our e-commerce solution, and we connected to Google, eBay, Amazon, Facebook, Pinterest, Square, and WordPress. And we allow you to take your product catalog from those places or big commerce and move them back and forth between these marketplaces. So you're moving your product catalog and you're moving your inventory seamlessly. And so you might, for example, have a big commerce online store, and you may have a product catalog that has 3,000 SKUs in it, and you say, well, I want to sell on Google Shopping. Once you get into the big commerce platform and you connect with Google, it automatically moves all of your product catalog into Google Shopping. And then you can buy PLAs or ads, Google AdWords, and then you can ultimately list your product over on Google Express, which is a little bit of a different marketplace. Up here, you can either move your product catalog from Amazon into BigCommerce or from BigCommerce back into Amazon. So it doesn't matter where you start. The idea is to have one single product catalog and one single inventory, and then you do all your shipping from one place. So recently, we're also adding Fulfillment by Amazon, if you've heard of that, and we'll also be adding the component of that called multi-channel fulfillment, which is the same thing. So you can then have an online store on Facebook, eBay, Amazon, and BigCommerce. Your product catalog is exactly the same. All the pictures, all the pricing, all the promotions, all the descriptions in all those places is exactly the same. And then when you sell something on any one of those marketplaces, it comes back in here, we store that information, we record it, and we allow you to fulfill it from within your BigCommerce online store. I don't even care if you launch an online store on BigCommerce. That's not important to me anymore. What's important to me is that I've created a way for you to fulfill those products and services and keep your product and inventory catalog current. And what happens is you might even sell something on BigCommerce or on eBay, and that product order, that you just sold something, gets shot over to Fulfillment by Amazon, and then Amazon actually fulfills your order. And that's kind of weird when you think about it, that you could actually sell something on Facebook, eBay, and it's fulfilled by Amazon. But that's the world that we live in today, in the world of e-commerce, and that's what we do. So in my job at BigCommerce, I'm the Vice President of Partner Management and Client Development. I have the best job in the whole company because I get to work with all of these companies. That wasn't something that we were able to do 4 or 5 years ago. We had to actually build up our relationships with them and the trust, and we started these relationships from scratch. But the fun part about what I do is I get to talk to these guys every day. We also have what we call a technology marketplace. So I have a team of people that also work with about 500 technology partners and 1,000 custom themes or theme developers. And so it ranges from companies around shipping, marketing, these are themes, this is ERP, of course mail, tax, and then ERP down here as well. So again, there are 500 of them, this is just a couple of names. So that's the ecosystem of BigCommerce. That's a little bit about the company of BigCommerce and what I do. So how do you create enormous value in SaaS? This is probably far off for most of you, but 9 years ago doesn't seem that long ago that the company got started. BigCommerce got started by 2 guys who met each other in a chat room in Sydney, Australia. They got the business going, and they decided that if they got to 1,000 customers, they would move to the US. For whatever reason, they chose Austin, so they came here, and this is now our headquarters. So we have an office here. Actually, we have one downtown, one in 4 Points west of town. We have an office in San Francisco and our office in Sydney still. So how did we get to that point? First thing is that we have a $100 million run rate. And you can do the math pretty easily on $1 billion and $100 million. That's pretty good valuation for SaaS. We have a competitor in the space that you probably have heard of called Shopify. Last year, Shopify did $660 million in revenue, and they're worth 19x trailing 12 months revenue. So they're worth about $12.5 to $13 billion today in the public market when they went IPO. 60 to 70% gross margin is sort of what you shoot for. 30 to 40% annual revenue growth rate, and that's after about 5 years. Obviously, in the beginning, those numbers are 80 to 93, 400% growth rate, whatever it is. But after you get about 5 or 6 years, you should kind of settle in about 30 or 40%. Focus on recurring revenue. In our business, it's that residual revenue stream that's really important to us. We do have a fair amount of one-time revenue that we do through partnerships, but it's really about that recurring revenue that gets you that value. So when the investors think about our business and they look at how they value companies like BigCommerce or Shopify or other companies, they're really primarily looking at that, the revenue growth rate. Their expectation is that you're not profitable, and in fact they hope that you're not profitable anytime soon, because then that means you're not investing your revenue very wisely. They'll be more than happy to have you losing money for long periods of time, so long as you're putting that money to work. If you're not putting it to work and you're just spending it on things, but you're not using that money to drive meaningful revenue growth at this level or more, then they're not going to be very interested. And then maybe a new term for some of you, but I think most people know what this means, LTV to CAC, long-term value compared to your cost of acquisition. We drive for a 5-to-1 ratio or more. So when you think about a BigCommerce merchant, for example, we have customers that pay us as low as $30 a month all the way up to $10,000 a month, depending upon the services that we provide. So when we think about a customer on our rate plan that pays us $79 a month, for example, we know that that customer will stay on our service for an average of 3 years. So it's literally $79 times 36 months. That's the LTV. And if our cost of acquisition of that LTV was less than 5-to-1, then we're good. And that's how we like to think about it. We obviously do a lot of digital marketing. We have a sales organization. We do lots of those things, so you factor all of that in. So when I meet with companies like yourself, I get asked 2 questions. In fact, it helped me that Lindsay invited me to do this because next week I have a presentation I'm doing at a conference called SaaS Connect. And there are people that are all in the SaaS business from large to small. So
You're welcome.
You got me to do it earlier. But I get asked 2 questions. How do I partner with other companies to grow my business? And how do I establish a partnership with BigCommerce? So probably more importantly, but how do I partner with other companies to grow? This is the important thing. Create a market-leading product solution together. And create a shared revenue and customer growth strategy. That's really the 2 things because, frankly, they want the same thing you do. They want to put the nuts and the bolts together to create a product that's better than the one you have. They want customers and they want to make money. It doesn't matter if you're Google or Facebook or whatever the size of your business is. I think everybody pretty much wants the same thing in a partnership. Create that best-in-class solution. So what's it like partnering with large companies? It can be a little intimidating. It depends on who you are and what you're doing. I'll get to what they look for, but just a little bit of ideas here. Communicate the value to them, so be very clear about what the partnership relationship value brings to both of you. I'll get into this in just a minute, but because of my role and because I'm a bit public in terms of the website and LinkedIn and all that sort of thing, I get probably 5 to 10 requests a week for people that want to partner with BigCommerce. Oftentimes it starts with something on LinkedIn like, hey, I think we should partner together. Do you want to have coffee? I don't respond to those, just to be clear, because they haven't created any value for me, and we don't have a relationship. I don't know anything about them, and they're offering me something that they don't even know if I care about it. So revenue and customer growth that will be available to them. Make sure you're clear about that. If you want to partner with them, you say, if we took chocolate and peanut butter and we put it together, it would be delicious and it would be really cool, and we'd sell a whole lot of that. But understand what it is that they want. Don't try to make it up. I had a guy email me this morning about something that has nothing to do with SaaS or e-commerce. The reason he's contacting me is because we raised $64 million. And you can imagine you get a lot of that. That he knows I have 60,000 customers in 120 countries, and now I'm flush with money. So he's like, partnership. You're not going to get a response on that either. Don't expect that they'll spend a lot of money just because they're worth billions. When I work with Google or Facebook or Amazon or any of these companies, I don't walk into that with the expectation that they're going to throw a lot of money at me. They are just as stingy as you are. Literally, I mean, they might have a few more zeros behind the partnership money to put behind it than you do, but they're just as cheap as everybody, right? Because they want value creation, and they're trained how to do this really, really, really well, and they're good at it. So don't expect that you're going to walk in there and they're going to say, oh, here's a whole bunch of money. They might start off with something small to test the waters, and you might be thinking to yourself, why is Google giving me like $5,000? Like, they have like billions of dollars. But that's their model. That's how they partner. That's how they get started. They'll demand performance over specific periods of time. Their investments in you that they make, they might say, well, I'll give you $5,000 to get this integration done for this partnership, or we'll do a co-marketing agreement, or whatever it might be. But they're going to say, at the end of 6 months, if we haven't achieved this milestone, I'm out. And so they create short timelines, and they measure them very carefully, and they're going to track you and hold you to them. And then be patient. Some of these companies, they just take a while to work with, and they want to see how you're growing and the progress that you're making. So how do you partner with BigCommerce? Develop a relationship, and do that through customers or do it through other partners. So as I mentioned, I don't really respond much to cold calling, and the reason I don't is because I know what I want, and most often if you're cold calling me, it's probably not what I want. And I know that sounds a little bit selfish, particularly for a small business, but I only have so many hours in the day too, and I have to focus on the things that are important to me. Demonstrate an understanding of my business and how you fit. So if you email me, for example, and you say, I have a business that does X, Y, Z, and it has nothing to do with what I do, or you have no understanding of how my ecosystem works or what I might need, then that's not going to be very interesting to me. If somebody were to contact me and said, hey, you know what, Kevin, I know that you raised a bunch of money, I know you have 60,000 customers, I have a product solution that will actually increase the conversion rate of your customers in India if they just add this one solution, and it's only $59 a month, and I'll share 25% of that revenue share with you if we can market this to your base of customers. I might say, that's interesting to me, let's talk. And it depends on what situation I'm in at the time, but that would be somebody who did their homework, that understood the value proposition, that explained what the value was to me, and tried to create a bilateral relationship as opposed to one that was just benefiting them. How will you contribute to my revenue and customer growth? And again, it sounds a little bit selfish, but it should out of it. If it's one-sided, if what you want to do is you just want to market to my customers your product solution, and there's nothing in it for me on the other side coming back from you in terms of product, take these APIs that I've created and you'll integrate into this solution. Your customers can get at, give me your APIs, and I'll build an integration to your platform, and then I'll give you that proof of concept, and we'll do a beta together, and then we'll go to market together. That's easier. That's you doing the work. Now, it doesn't mean that I don't do the integration work myself sometimes. Often I do, particularly for Google or Amazon or eBay or Facebook or PayPal, but generally not for those smaller technology partners that I work with that should be doing the work on their own. And then understand the stage of our business and what I might need at this stage. I think I mentioned that before. Like, you know, if you're looking at an announcement that we did yesterday, for example, that said we're going to use the funding for international growth, that'd be a good time to contact me about something interesting about international growth. again, because of what we do and because this year alone, BigCommerce will process about $6 billion in GMV for our merchants. I get contacted by lots of payment companies, and there are lots of them. I get contacted by them, and they'll say something like this, and I'll fill in the blank. I want to be your exclusive payment provider for all of your customers and process all $5 billion of your GMV in return for 20 basis points. That gets deleted so fast because it just doesn't work that way. You got to understand that I'm a 9-year-old company and I'm processing $5 billion, and you have to think to yourself, I'm betting he already has good payment partners. I'm betting he already has partners he works really closely with. So how do I fit into that as opposed to coming at him hard and saying, I'm going to be the guy, I'm going to be the main one, and I got a better deal? Because that's probably not very realistic. So understand the stage that we're at together. So what's important early on? This is just my experience. I'm not preaching or giving you the rules on how to do it. You all know how to do that yourself. Revenue growth from anything and everything, and I'll explain what I mean by that in a couple of slides. Look for the growth drivers and follow that. Keep costs as low as possible. For as long as possible, you're going to need it. If you overspend, do it in sales and marketing and try to get to a 5:1 LTV to CAC. Drive towards residual revenue, feed the money machine. But again, if it's a one-time revenue thing and it helps fund your company and it gets you some growth, do it. I'm not suggesting that you don't. But try to turn that one-time payment, if that's what you're looking for, into some kind of residual revenue. If somebody says to you, I'll pay you $200,000 for this, figure out how you can make that into a 2-year deal. How can you make that that you get paid every month? Something like that, because that's really what the investor's going to look for. Don't let people or companies slow you down. Go at your own pace. If you're waiting for something, move on to the next one. If you're waiting for another partner to respond, find a different one. Don't let people slow you down, because you'll get stuck behind some of these big companies, and you'll wake up one day and you'll be like, I just wasted 8 months, and they changed their mind. So don't let them take you off course. And then focus on the important things. At BigCommerce, over the last years, early in the years, going back 9 years, we had what I refer to as a business inferiority complex. And what that means is that the founders of our company, who are no longer involved in the day-to-day business, but the founders of our company would sign a partnership relationship with anybody and everybody. They didn't care. They just thought the more was better. So when I joined the company 4.5 years ago, we had 72 different payment solutions in our platform. That was because they let anybody come in. And that means that today, if I had let that happen, that means that $5 billion, $5.5 billion, almost $6 billion, would be spread across 72 different companies. That's not very good. And so what I did when I came in is I actually reduced it down to about 30. I literally fired some of our partners, because I said, we're just stretching ourselves too thin, and I don't need everybody. And so what I mean by business inferiority complex is that they signed deals with everybody because they were just happy to have partnerships being signed. To them, that was just the important thing, was check that box. Oh, they love me. They want to partner with me. Yes. And the more we thought about it, each one of those integrations on the payment side cost $250,000 in resources to build. But we weren't getting any value out of it. So don't let that happen to you. Just doing partnerships, just doing relationships, just doing things with other people is not what's important. Wait, build the value on your own, get yourself established to the point where you have the power and the leverage to go get some of these relationships, and pick the ones that you want, and then really work hard to go get those. But don't let other people take you off course. Just check the box and say, I have a partnership with these people. Pick the ones that you want, have a strategy, and figure out when that'll happen. But again, be patient. It might be a year or two, for example, before you come talk to people like me. Maybe you need to do something else to get established first. So most important of all, and this is the end of it, I promise, and we'll take questions because I still got 20 minutes. I want to tell you a little bit of a story about the most important thing, and I think this is probably applicable to everybody. Back when we originally founded Flash Valet, which has been about 6 years ago now, we started off with a couple of theses, and this also applies to the story I told you about BigCommerce. The thesis was This is a valet parking guy, by the way. He's running to go get a car. Back 6 years ago, what was going on was that the companies that own parking lots, and you probably see them around town, one of the biggest ones called Laz, they were buying up all these valet parking companies because they said, well, I have an asset, and that asset is sitting empty in the middle of the night. So what do I do with this asset to monetize it? And so if you know anything about valet parking, these guys rent parking lots for $200 to $500 a night in order to park cars there. And so the parking lot companies can make a little bit of money at doing that. So the parking lot company said, well, forget that. These are my assets. I'm going to roll up these valet parking businesses, and I'm going to figure out how to run both valet parking and then utilize my asset in off hours. Well, that was a good idea. The problem was these parking lots are too far away from where your valet parking business is. So Flash Valet got started with the idea of it being a mobile app that allowed you to, when you dropped your car off, you got a ticket, and then when you were in the restaurant or the bar, you would text your code to a number, and then this guy is no longer running to go get your car. He's actually sitting in a parking lot just waiting for you to text him. He might be a quarter of a mile away. And he gets your text and it says, I'm ready to go, and he texts you back, and the system comes back and it says your car will be ready in 5 minutes. So now I can just relax, I can finish drinking my wine, I know I've got 5 minutes to get outside. This guy now doesn't have to run to get the car, he's actually sitting in the parking lot, he just jumps in the car and drives it over. It's more secure, and it's more efficient, and it allows them to use their assets. So that was the original idea, so we created Flash Valet. You know, no more of this. No more of people just sitting around waiting for you anymore, which is very inefficient and costly because nobody really ever thought about the fact that the valet parking business was not being run very efficiently. And so our original solution actually helped them be more efficient. And that was good. It was really good. But if you think about the fact that valet parking businesses, you know, there's so many of them around the world, or the US in particular, and then around the world, how are you going to go find every one of them and sell them? So the total addressable market that we had for Flash Valet was enormous, but getting to them was not easy to do because they weren't under one big umbrella. If you look around here in Austin, I don't know, there's probably 50 valet parking companies owned by probably 50 different people. You'd have to go sell every single one of them. The other problem was that if you've ever, most people have, valet parked, you have to have cash. And so you walk out and you're like, well, I don't have the money on me, right? So lots of problems in valet parking. It was ripe for disintermediation. It was ripe for invention. It was ripe for some kind of business. The problem was that, what other problems are going on in the parking space, right? We wanted to stay in parking, but we didn't necessarily drive out of the parking lot so you can pay them. Again, you have a cash problem and you've got payroll, so you're paying for that person to accept cash. Why would you do that? That's not very efficient with all the technology that we have. So we said, all right, that was part of the problem. The other part of the problem was, and you can't read this very well, is that when you think about valet parking in particular, we weren't really thinking about it in a holistic way. The #1 location in the city of Austin that valet parks cars is St. David's Hospital. They park 3,000 cars a day. Now that's way more than any nightclub or restaurant that you're going to go to here in town. And so when you think about the Four Seasons or any hotel that does valet parking or the hospital, those are not employees that work for that particular location. They're outsourced. These companies, even the Four Seasons, for example, they hire a company to come in and do it. And so we thought to ourselves, #1, we were looking in the wrong place for people that were doing valet parking, and we hadn't figured out how to solve a problem that the parking industry had. So what we did is we created this device, and you've seen some of these probably around town. So now what happens is, when you go into a parking garage, you'll get a ticket, and it's got a barcode scan on it. And as soon as you're ready to leave, you take out your cell phone, and you scan that barcode, or you enter the code into an app or a web page on your phone, and then you make a mobile payment. You use a stored credit card, you make a payment, and then when you drive out of the parking lot, there's a simple thing right here where you actually either hold your phone up or you hold the ticket up there and you just scan it under the scanner and the gate opens. And so this is a technology that we created. This is all serverless technology, so it's all in the cloud. And this device right here costs about $5,000. In a parking garage today, what they were paying for people just to sit in a box and collect money, and the little arm that goes up, which is by a company called Amano, was costing them probably $5,000 a month, and for $5,000 one time they could actually own this and operate it. So our revenue just skyrocketed. As I mentioned before, this year we'll do 17 million. The company's worth over $60 million because we've been offered that on a $1.75 million raise. And we're going to hold out for 100 or 200 million on a $1.75 million raise. That's a pretty good deal, huh? Yeah. If we can make that happen. So, but that happened not because we got so in love with the original idea. It's because we finally decided that we weren't thinking big enough, and we really sat down and thought to ourselves, we like the parking space, but we're really not thinking about this in the right way. But we had the foundation for it. But if you think about this device versus a mobile app, those are fundamentally different things. And so as you go through and you create your business and as you continue to grow, don't be afraid to really stop for a minute and just think, am I really doing the right thing? I love the space that I'm in, I understand it, I'm gaining all of this knowledge, but is it really unlocking that total addressable market that I could be getting to today? And so maybe even reflect on that example if you want as a way to completely rethink what you do. Again, started out as a mobile app, turned into an equipment business with a cloud-based solution. That's it. Hopefully I left time for some questions. Yes?
So I'm actually going through this process right now of building partnerships with larger corporations to help us get into the market. So you said that there are a lot of emails that you delete or you don't respond to. What are some that actually made you go, oh, okay, I'll take that coffee today?
It was somebody that was specifically appealing to a particular need that I had. So it takes a little bit of research, right? I mean, oftentimes the emails I get, when I say that, I don't mean to be crass or mean about it, but they're just not well thought out. It's from a business development person that maybe saw me or saw the company in a press release and just wrote me sort of a standard email. Hey, I'm so-and-so business development from such and such company. I think we should partner together, want to have coffee. They didn't really describe to me why I should do that. And I get that they want to create a little bit of intrigue so that over coffee they can help me understand what that intrigue is all about, but I don't have time for that. I don't have time to have coffee with people to do that. If he had said to me in the email, I did a little bit of research, I know somebody that you work with over at Google, he recommended that I reach out to you, and I know that you're going through a review right now of all your PIM and ERP and OMS providers, jargon for our business, and I have a particular solution for you. Our solution is best for mid-market merchants, $1 million to $50 million, and we do revenue share with our partners, and we want to refer customers over to BigCommerce to build on your e-commerce platform as well. You got it. That's the one I'm going to take. Know that person very well, but he was also timely in the sense that he knew that that was something that I probably needed. So it had, you're not a spray and pray kind of business development person. You're really being very strategic about it and taking the time to do your research. If that person had taken a day or two or a week or a month to really think through and get that all planned, because you're only going to get one shot with me. And I don't mean me, I mean people that you're trying to work with. So take your time. Get it all figured out, get it ready to go, get it packaged up, and do your research before you send that email. Just sending a bunch of random emails around to people and saying, hey, let's meet and see if you can try to get something going is probably not going to be very effective.
Do you ever
Sorry.
Yeah, I'll go after him.
I was just asking, so one of our problems is we're working with a partnership right now. Somebody like me, who might have other customers, using my solution instead of yours.
Yeah, if I understand what you mean. I mean, take for example what I do in working with Google or Facebook or Amazon or eBay. I mean, technically they're in the same space that I am. So we had to rebuild some of that, right? Because they didn't even care about us back then, right? We were just a little mad. But it took time, it took those relationships, and it took trust. And I think you just have to decide for yourself, what's the worst possible thing that could happen versus the best possible thing that could happen here, and then does one outweigh the other? and then you kind of go for it. Not to say you wouldn't get burned or something might go wrong, but if you trust them and you built a relationship, it should be okay.
Yeah, they actually seem right now like they're okay with it. I'm more concerned about as we build out our product because like I feel like we're going to start stepping on more of their toes because there's only so many ways you can go.
Yeah, and it doesn't have to be forever, right? It could be up to a certain point where you're taking advantage of each other's capabilities, and then you get to a certain point and you just kind of have a conversation with them to be really transparent and say, I'm kind of in your space too much, this isn't really working out anymore, we should probably go our separate ways. But if it's meaningful to do it now, why not? I don't think there's anything wrong with avoiding it, or not avoiding it.
Yeah, I was just gonna ask, can you ever like end up over pitching someone? I know that could be a problem too.
Not with the right message.
Okay.
You know, it's
framing it the right way.
Yeah, frame it the right way, take your time, and make sure you have your facts right and your information right. I mean, you're not going to get it 100% right. You don't know exactly. But just be professional about it and be, you know, aware of that person's time and how busy they all are. Look, I get it. You saw some of the companies up there. Lindsay and I worked for Tabbed Out early on, back when we had 4 people, and so I was trying to get every POS company in the world to talk to us, including companies as big as NCR, and at the time, you know, other ones like that, and they were like, go away. But it took 4 years, right? And after 4 years, we had the attention of the largest POS companies in the world talking to us and wanting to do partnership business with us. But it took a while. And you know what part of it was? We kind of looked at the stack and we said NCR is up here in terms of POS, and then there were, you know, ones below that like Micros and things like that. And then we started down at the bottom.
Jumper.
Yeah, there was a guy here in Austin that built his own POS system for hospitality businesses. I mean, John Louis was, what, maybe had 50 locations or something?
If that, yeah.
We started with him, then we went to a company called Dinerware, then we went to a company called Harbor Touch, then we went to another company like Digital Dining, and we worked our way from the bottom up so that by the time we made enough progress, these bigger companies were like, oh, they're legit. Like, I mean, yeah, if they're working with them, then it must be working, and they've done a little bit of my due diligence for me, so sure, I'll take a meeting. But that took 3 years, 2 or 3 years to build that up. I mean, it wasn't like we were wasting our time going up that stack. They were more interested in working with us at the small level.
Yeah.
Now, what was important to us, by the way, at that point is once we got into the bigger companies, that we didn't kind of shit on the little companies, because that would not have been fair to them, because they helped boost us up, you know, and so we were still good with them. We still let them in on some of the stuff that we had going on, and we didn't just say, well, thanks for what you did for us for the first couple of years. Now we've moved on to the big guys.
Yeah.
So going back to her question on partnerships with bigger companies, what would be the best channels to reach out to decision makers? Because when we are reaching out to bigger companies to say either build partnerships or maybe work with them, a lot of times when we email them or when we call them, it goes to people that are really not the decision makers, and there's a lot of times when we get frustrated because things are not moving forward, and they don't take decisions, and they kind of do just waste our time and their time, and it's like we like to build partnerships, but then at the same time we also want to reach out to them in the right channels. So is email the best way to reach out to, or in your opinion, I know you'll be swamped with like thousands of emails a day, but
yeah, I don't know that there's a right answer for that. I will tell you the ones that I find funny are the ones that I get the email where they try kevin.mckeand@bigcommerce.com, kevin@bigcommerce.com, mckeand@bigcommerce.com, and I get all of them, right? I mean, I can see them all. And at that point, I know you're just guessing.
Yeah.
So that's probably not great. But the ones, there's that, and then I would say also, don't start with my CEO and don't start with my boss, because they're probably going to delete you first, and then you're going to wonder why. Figure out who is that person at the appropriate level. For me, as being a VP of BigCommerce, it's probably an okay level to start, but it might even be better if you started with somebody that works for me. You probably have a connection with that person through LinkedIn, might be a second or third level connection, but maybe try that. come in through LinkedIn and say, hey, I noticed, this is going on, this is what we're doing as a company, could I somehow get an introduction to Kevin, and or would you at least talk to me and tell me whether you think this is an important conversation to have? And then if one of the employees that works for me comes to me and says, hey, I know this guy and he's got this company and I think it's a good idea, would you end up talking to him? Probably would, yes.
Some of the partnerships that we're looking at are a little further down the road. However, the kinds of folks we would approach essentially, could take a team of 10 people and a lot of resources and potentially go build exactly what we're building. And they'd be chasing us, hopefully, but and is it NDA something that really protects you from that, or are you just taking that risk when you go have that meeting that there's a chance that they say we want to build this ourselves, or I just need to do a good enough job of selling myself, or we want those guys building it, and we just want to. Is there a way to protect yourself, or is that just a risk that comes with the partnership with the company?
Well, I can tell you how it works at BigCommerce. And so even though my role is business development and partner management, I also have a really strong product role. I work very closely with the product team, but I also solve product solutions through partnerships. And so if you look at BigCommerce, for example, you'll note that we're a partner-centric business. And so when you look on our in our control panel, you'll see, for example, an integration with companies called QuickBooks Online, which is Intuit, or Xero, which is an accounting solution. Those are actually not integrations built with those companies. They're built through a third-party partner of mine called SaaS. And so what he does is he's actually built all these integrations, but what I'm doing is I'm presenting it to my customer as if it's a native integration through a third-party company. Now, why did I do that? I did that because my product team said, I don't have the roadmap for this until like 2096, and even if I did, I don't really want to do it because accounting integration scared the shit out of me, right? Because it affects customers too much, and so I don't want to do that. So today, for example, I pay this company SaaS. I pay him $300,000 or $400,000 a year to provide this integration for our services, but the trade-off is I didn't have to have my product team build it, and they don't have to maintain it. And so in that particular example, that's where I brought a product solution to our team, and they didn't want to do it. Now, sometimes what happens is my product team says, no, I'm going to build it. It has to be native. I'm just not ready to do it right now, and so then I'll go off and do something else. But if they say, yeah, we need that, it's really important to us, I don't have the time right now or anytime soon, so if you can solve for this through partner relationships, we're going to do that. And in our world, we call them native, semi-native, and then just an app. A native to us would be we built the integration, and it would be a QuickBooks integration directly to them. Semi-native would be like a SaaS integration where it's actually labeled QuickBooks, but it's through somebody else. And then just an app would just be just an app called SaaS where he actually connects to all these companies. And so I think it depends on, in that particular case, what's going on. But absolutely, you may be able to solve a product solution for them that they know they need to solve, but they don't necessarily want to use your brand name. And that's one of those things where you have to be a little bit careful so you don't turn into a development house for them. Right. It's still your core product behind the scenes, but the one thing you may give up and you may not get out of that is your branding and the brand promotion that you want out of it. And that may be okay. Right. In certain circumstances, you say, I'm willing to give that up because I need to get proof of concept, I need to partner with this big company, I need to get some revenue going.
Yeah. And I guess in our specific case, it'd be more about just being a good judge of like where is that point where it's like, and ours is more of a database than like a software specifically. So like we'd be building out a database of these producers, farmers market vendors, and then we'd go to Instacart or someone that does delivery and say, hey, if you guys want to start like delivering from a farmer's market, we have the database where we can build that to serve your customers and be on your website. So I guess for us, it's just like what I'm hearing you say is like what we can do is be a good judge of when it's like, okay, this is something that would take them a significant amount of time and resources to build, so maybe it would be a good time to approach.
Yeah, and if you can build a partnership in such a way that they view you as their development arm, so to speak, and you can keep outpacing their need to build it themselves, because the more you add, the better you get, the larger you are, the more it's going to be hard for them to do it. At some point, they're just like, this is good, it's working out for me, I'm going to leave it that way for a long time.
Do you think it's beneficial to someone to say, hey, we're in the process of building this, and we'd like to build it where it's usable for your platform. So it's like pre-partnership, but it's like, hey, we'd love to know your specs as we're creating this.
Yes.
It's okay.
Yeah, absolutely. Yeah.
Thank you.
Yeah, you're welcome. A little after, I don't want to keep everybody any longer. Thank you for indulging me for the time.